Good morning to Ms. Ain. We are from Group 21 and the financial institution that we have chosen for our group is Bank Audi from Lebanon. These are my team members for this assignment. Bank Audi is a private joint stock company that was held by the Audi family and also other Kuwaiti investors and was founded in 1830 and incorporated in 1962. Bank Audi provides products and also services on retail and also personal banking, private banking, commercial and also corporate banking. There were issues faced by the Bank Audi, and one of them was war in Gaza during 2023, raised geopolitical issues, and also had worsened the economic uncertainty and the local inflationary pressures. There were also issues with IFCs, which is the International Finance Corporation, which began after the Lebanese financial crisis in 2019. The debt issues further increased when Lebanese crisis had worsened, with the depreciation of the Lebanese pound and inflation continuing to worsen the economy by 2022. The case of illegal money laundering activities had indirectly led to debt crisis. As for the financial performance, the bank is actively seeking to improve its liquidity, restructure its debt, and also reduce the exposure to sovereign debts as the bank's financial performance shows a significant contraction in assets starting from 2022 to 2023. The adjustment in its loan portfolio and also the depreciation of the Lebanese pound made the bank's assets reduce by over 40% from 2021 to mid 2023. Despite all these efforts, its operations in Lebanon were heavily affected by liquidity shortages and also currency devaluation. As for the leadership team, as of the recent reports, Samir Hana has been appointed as the group CEO, replacing Raymond Audi, who has stepped down as the chairman for Bank Audi due to health reasons. Samir Hana has taken a broader role in steering the bank through the crisis. The executive committee includes senior leaders from the bank's various operational units. As of the business model, Bank Audi provides services such as investment banking, asset management, corporate lending, savings, and also checking accounts. The country's currency and also financial crisis have given a significant impact on the bank's business model. Despite these issues faced, the bank is still trying to restructure its assets and also debts in order to maintain its operations.
Hi, I'm Chansin. So today I would like to talk about the causes. So the first factor that led to this debt crisis was the regulatory weakness of the bank in handling operation during the Lebanon economic instability in 2019. So when the Lebanon Central Bank imposed capital control to other banks, including Bank Audi, it restricted the access for depositors to withdraw funds and make international transfers. Bank Audi lacked implementing regulation on handling this sudden capital control, which led to the bank's immediate cash flow having been reduced when depositors were unable to access their funds. So Bank Audi is not able to convert their deposits into usable funds as the ability for the bank to generate liquidity has been limited. Hence, Bank Audi was forced to default on their debt obligation to IFC. Furthermore, when bank audit did not implement proper regulation in these situations, the losses accumulated by Lebanese bank will also impact bank audit to face insolvency issues. So this led to the bank's audit balance sheet to be impaired as they did not have sufficient assets to cover its liabilities to repay the debt.
I'm Sophia. I'm going to talk about the cause. The second cause that led to bank audit's debt issue is weak internal management. Bank audit lacked critical reforms when the implementation of capital control law led to financial instability and strained the bank liquidity. Bank audit's weak financial management exposed it to the liquidity risk and made it challenging for the bank to manage sudden withdrawals of funding requirements. This weak internal control management impacts bank audit's operation and revenues with fewer loans and less deposits having an effect on revenue. The failure to repay loans has resulted in a major portion of the bank loans portfolio becoming impaired, further affecting its financial stability. The weak internal management caused Bank Audi unable to adapt to the crisis and failed to manage its funding effectively, as it lacked the resources to handle unforeseen loss or crisis.
Hello, my name is Lee Roshan. I'm going to talk about how does financial crisis cause bank audits liquidity risk increase. As the PPT has shown, the background of Lebanese government implemented a fixed exchange rate policy, which is the essential cause that liquidity risk increase. Fixed exchange rate is set by government. It doesn't set according to the actual exchange rate. To support this policy, we'll need sufficient foreign exchange reserve, but as time flies, the depletion of foreign exchange reserve is unable to support it anymore. But the policy has implemented for a long time. Local residents already treated US dollar as a stable reserve currency. So this will reduce demand for the Lebanese pound, but also cause devaluation of Lebanese pound and economic instability. The devaluation of Lebanese pound also affect the Bank Audi financial status. As the table displayed on the screen indicate, all the amount goes up, especially the liability increase dramatically. The gap between liabilities and assets is huge, means that Bank Audi will need lots of money to cover this gap. Unfortunately, devaluation of Lebanon currency will also comes with inflation and rising price happening. Most of the local residents face this kind of situation will choose to withdraw their money from bank. This is the first factor will cause Bank Audi's liquidity risk goes up. The second factor is financial crisis and COVID-19 happens at the same time, which means tourist industry as a main income sources of Lebanon has been hit hard. This phenomenon gives them chance to default the debt they have made before. The third factor is economic instability of Lebanon has caused a poor reputation evaluated by Fitch Rating, which means that all the bank's financing channel is limited. So in a conclusion, all these factors will cause Bank Audi in trouble of being unable to repay its debt on time.
So another risk is credit risk. So the risk can be mentioned as one of the most critical risks to which a bank is exposed. It usually represents 75% to 85% of the risk in banking institutions. Bank Audi's credit risk will increase when it owed the IFC for over 234 million US dollar in large loans. According to Fitch Ratings in 2019, Bank Audi's credit rating has been downgraded to CCC that indicates a very high level of default risk. Additionally, they have also warned that further deterioration in its operating environment and imposition of capital controls by Lebanese authorities will lead to a downgrade, resulting in a loss of depositors' confidence. Therefore, the heavy debt exacerbates bank woes and leads to highly leverage. The ongoing litigation will strain the bank's resources as it will need to face hefty financial penalties or even reputational damages. So these factors may lead to a decline in customer or investor trust, eventually leading to a lower deposit rates and higher cost of borrowings in Bank Audi. This can be said that it makes the operating environment worse. As a result, a credit rating agency may view this combination of high debt and legal challenges as a sign of weakening financial stability, leading to credit rating downgrades and higher borrowing costs.
I'm Yushan. I would like to talk about the solutions that Bank Audi did to reduce the impact of the financial crisis. First, Bank Audi sold Euro bonds twice, which was on October 2019 and March 2020. Besides, Bank Audi reduced loan by reviewing the loans that will be high defaulters, means a high possibility that the borrowers cannot pay back the loan. As a result, the total loans was reduced by 17%, which was Bank Audi reduced 2.4 billion and Audio Bank in Turkey reduced 734 million loans. The next step is Bank Audi finance in capital market, and Bank Audi has successfully raised 210 million through issuing common shares to public. This step helps Bank Audi to reduce its liquidity risk and credit risk. Moreover, Bank Audi sold debts and assets to mitigate its financial crisis. In 2020, Jordan Capital Bank signed a business transfer agreement with Bank Audi. This agreement is to tell us that Jordan Capital Bank acquired Bank Audi all assets and liabilities in Jordan and Iraq. Not only that, Arab Bank also acquired all of the Syria Bank Audi shares in Adi Trust Bank. In 2021, First Abu Dhabi Bank acquired 100% shares of Bank Audi in Egypt, and through these sales, Bank Audi successfully transferred all subordinated debts to First Abu Dhabi Bank. Furthermore, Bank Audi divested loss-making subsidiaries due to the tough economic environment of high inflation and currency devaluation. On 15 October 2024, Bank Audi sold Audio Bank in Turkey to Abu Dhabi Development Holding Company. The company acquired a 96% of stake through a definitive agreement. By adopting this step, Bank Audi can improve its financial performance and reduce its financial burden. Lastly, Prudent management approach was also adopted by Bank Audi from 2021 to 2023. Bank Audi first used Strava platform, which is originally to monitor and regulate currency exchange, but is no longer to be used because exchange rate in this platform is increasingly different from market exchange rate. Therefore, Bank Audi quickly adopted actual exchange rate, which occurred in Lebanese Ministry of Finance plan of 2022 budget, although there is no accurate result for government yet. By using this approach, Bank Audi can improve debt repayment ability by integrating operations and increasing its revenue.
Firstly, Bank Audi could solve their unpaid debt issue through debt restructuring. Bank Audi could practice debt equity swaps to reduce the bank's debt burden. This means that Bank Audi can consider converting a portion of its debt into equity, for instance, offering a stake of Bank Audi subsidiaries or their bank to the IFC. Then equity swap can improve the liquidity of Bank Audi by reducing the bank's liability to the IFC. However, Bank Audi needs to waive part of the debt to be repaid through debt to equity swaps, which means that Bank Audi will lose part of its equity, rights and control over the business and company. The next recommendation that Bank Audi could practice is geographic diversification. Bank Audi should reduce the reliance on only holding on Lebanese government bonds, but instead to consider to invest to other international bonds or stable government bonds outside of Lebanon, and also to multinational companies that issue higher quality bonds with strong credit ratings. Geographic diversification could help to spread out the risk and secure the assets by investing assets in different places or regions, hence reducing the risk of debt default when one country is facing an economic crisis. Furthermore, geographic diversification could make sure that funds are available in foreign currencies to repay those debts, as those investments have the ability to generate income or return in those currencies. However, geographic diversification might increase the level of complexity, as it may be challenging for the business to monitor and to control their portfolios in different locations and regions effectively.
In conclusion, Bank Audi is a commercial bank that is still facing a financial crisis. The main conflict of the bank is debt, as the bank owes debts to IFC since 2019. However, Bank Audi had required IFC to stop interest paid on subordinate loans. In 2022, IFC filed a lawsuit for Bank Audi due to overdue payments and interest. Moreover, the debt issue was worsened when Lebanon crisis had arisen. Due to the Gaza war in 2023, Lebanon faced inflationary pressure. This led Bank Audi unable to repay debts. Furthermore, the economic instability in Lebanon since 2019 also contributes to this debt crisis. Moreover, illegal money laundering activities are indirect factor contributing to the bank crisis. A likely reason for the involvement in such activities could be the bank need to manage a high compensation cost, which increase its debt burden. Additionally, the bank weak regulation and internal management had hindered its ability to devise strategy to adapt to the country's economic crisis and change, resulting in high liquidity risk. The related risk that the bank Audi is currently facing is liquidity risk and credit risk. Liquidity risk happens when the bank is unable to meet its short-term financial obligations, such as loan and interest from IFC. Bank Audi has a high credit risk from debtor point of view, which could be more challenging for the bank to make fundings. One solution implemented by Bank Audi is to reduce credit risk and liquidity risk by selling Eurobonds, reducing loans and financing. As the bank has sold its Eurobonds to reduce losses and due to the bank due Liban requirements, Bank Audi had raised 210 million through common shares to improve debt repayment capacity. In 2020 and 2024, Bank Audi had sold its branch, assets and liabilities and shared them to other banks and decided to divest its loss-making subsidiaries, such as Audio Bank in Turkey, respectively. This can allow Bank Audi to focus on its core operation and improve financial performance. From 2021 to 2023, Bank Audi leveraged a prudent management strategy to improve debt capacity, repayment by integrating operations, and increasing revenue to cope with possible risks. Although the Lebanese Ministry of Finance planned to adopt the actual exchange rate of the Lebanese currency in the 2022 budget, there is no clear result yet, and Bank Audi has adopted a conservative approach. Furthermore, one recommendation for Bank Audi to practice is debt restructuring, such as debt equity swap, to pay debt with its equity. By converting a portion of its debt into equity, such as offering a stake of subsidiaries, which is Audio Bank, to IFC. This can help Bank Audi to improve its liquidity. However, it can be challenging due to Bank Audi waiving part of the equity. It can lead to losing some rights and control over the company. The next recommendation for the bank is geographic diversification. Geographic diversification is also the most important recommendation for the financial institution. Bank Audi should reduce solely reliance on bonds of the Lebanese government and consider shifting a portion of its investment not only to Lebanon government but also international bonds and stable government bonds outside of Lebanon. A diversification can spread out the risk and secure the asset by investing in various places or regions. Hence, when one country is facing economic crisis, Bank Audi could reduce the risk of debt default. Additionally, it can be ensured that funds are available in foreign currency to repay the debts. Nevertheless, the diversification might make the business more challenging to control and monitor their portfolios in different places effectively and increase the level of the complexity.